What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. I do not offer an investment trading program. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks. When you open a new Webull brokerage account, put at least one penny in that account. They're going to give you up to 12 free stocks. If you're interested in an offer, there's a link down in the description box of the video. I want you guys to go click on that link, open up your new Webull brokerage account today, go get that free stock, go get that free money. In today's video, guys, I want to talk to you about the 50, 30, 20 investment strategy I've used for the last 20 years to help me build my wealth. Now, that investment strategy is based around investing in the stock market. Investing in what I like to call paper assets. 50% of every dollar that I invest goes into a broad-based stock market ETF or index fund. And the reason 50% goes broad-based is because I want to be as diversified as I can with the majority of the money that I'm investing. And for me, the S&P 500 or the total stock market ETF gives me the broader base stock market. If I go S&P 500, I got the top 500 companies in America in my investment fund. So 50% of my money is being invested in the top 500 companies in America. If I go total stock market, then 50% of my money will be invested in the top 3,500 companies in America. So as you can see, I'm investing in the broader based stock market, every industry, every sector. Now let's move on to the 30% of my money that I invest. And that goes into what I like to call a core sector ETF. So here in the United States, we have about 12 or 13 industry sectors. Sectors like healthcare, tech, consumer discretionary, energy, real estate. So I like to take 30% of my money and just get a little bit more specific to an industry that I like. And for me, guys, I like the tech industry and the healthcare industry. So I'll take 30% of my money and I'll go find me a tech ETF or a healthcare ETF. The two that I like are offered by Vanguard. Now, of course, you can go out and find whoever you want to find, but I like and use Vanguard. So when I'm looking at my tech ETF for my 30%, I typically will invest it in Vanguard Information Technology ETF VGT. And on the healthcare side, I like Vanguard Healthcare ETF VHT. Now, again, like I said, there are 12 or 13 different industry sectors. So you choose whichever one you like. But I like to be a little bit more specific, but I still keep my diversification, because in my tech fund, right, it's going to have the top 30 or 40 information technology companies in that particular fund. Same with my healthcare ETF fund. Going to have the top 30, 40, 50 healthcare providers in the United States in that fund. So although I'm specific to an industry, I'm still diversified because the number of companies that the money is being invested in. Now let's move on to the 20%. 20% of my money, I like to invest in individual stocks / cryptocurrency. Now for me, I'm not a big crypto guy. So I tend to take that 20% and put it in individual stocks. But I have lately taken a small part of that 20% and started buying Shiba Inu and Dogecoin. But the type of companies I look for when I'm picking individual stocks, which you guys know I'm not a big individual stock picker. You can tell 80% of my money goes into ETFs and index funds. And then that last 20%, like I said, would go into individual stocks if there are individual stocks out there that I like. And currently there are. You guys know I'm big on Tesla. So a lot of that 20% lately has been going in Tesla. I'm also big on Apple. So I've been buying up some Apple as well. And since I'm an old financial services guy, I spent 25 years in banking, I like financial services companies, Bank of America and Wells Fargo. Been investing in those two companies for many, many years. So there you go, guys. There's my 50, 30, 20 investment strategy that I've used for 20 years, man. And it's given me an opportunity to really build wealth through investing long-term in paper assets. Your strategy has to be a strategy that works for you. But I thought I'd give you at least an idea of what I do, because I get questions all the time, whether it be down in the comment section of the videos or on Instagram through DMs. People ask me, Richard, how are you investing? What should I do to invest? And I think everybody's investment strategy is individual to them, right? For me, the 50, 30, 20 investment strategy works. For some people, they like the 60, 40 investment strategy. And the 60, 40 investment strategy is simply this. You take 60% of your money and you invest it in equities or stocks. Now, those equities and stocks can be through ETFs or individual stocks. And then that individual would take 40% of their money and invest it in bonds, right? See, bonds are considered slightly lower return, but safer, right? Because it's a guaranteed rate of return. Typically, a bond is a loan, right? A bunch of investors put their money into a fund. That fund goes out and finds companies or municipalities to lend that money to, and they get a fixed rate of return on that money. So that's a bond. It's typically a lower return than equities. There's two investment strategies that you can consider: 50, 30, 20 that I use, or the 60, 40, which a lot of people have used and continue to use. Drop me some comments down in the comment box and let me know what you think about my strategy, my 50, 30, 20 investment strategies. Like I said, guys, it works for me because it gives me 100% equities. And I know a lot of people might say, well, why are you 100% in equities? Isn't that risky? Well, guys, yeah, it's risky, but I'm trying to grow my wealth. You know, when I get to the golden years and I'm living off the income from my wealth that I've already built, then I might think about bonds, because now at that point, I'm trying to protect my wealth. Right now, I'm still trying to grow my wealth. And I got a 10 or 15 year window before I need that money. So I can take a little bit more risk and invest in equities because I got a long enough time frame to recover. But if you're getting ready to retire and getting ready to live off of that income, you may not want to be 100% in equities, because if we have a down market like we're having right now, who knows how long before the market's going to be back up again and your money is going to be back up again. So a lot of people who are already in their golden years and using their investments to live off of, they tend not to be 100% in equities, right? They tend to move their money to more conservative investments to protect their wealth. Whereas right now, I'm not concerned with protecting my wealth. I'm still trying to grow more wealth. So I'm able to take a little bit more risk. Like I said, guys, your investment strategy is going to be individual to you. All I can tell you is find one that works for you. Just be in the market, man. That's the big thing. Get yourself in the market. This is a great time to build wealth. Everything's on sale. And like I said, if you can hold that money 3, 5, 7, 10 years in those investments, I think they'll pay off for you. Again, that's just my, that's just my opinion. Whether it'll pay off for you or not is certainly up for debate, but I think it will. If you want those 12 free stocks from Webull, like I said, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.